Well, hello and welcome to Morning Trade with Money Control. I am Nandita Khemka and I am here to help you navigate the day with actionable trading strategies, the sectoral trends to watch out for, and most importantly, your queries during the course of the show. So please keep commenting on our live feed and we will have your queries answered by our guest on the show. But before bringing on board our guest, let's take a look at what the global handover is looking like this morning. Wall Street swings lower for a second day as strong US jobs data stokes fears that the Fed will continue with its jumbo-sized interest rate hikes. The central bank, remember, is expected to raise rates by another 75 basis points later tonight. Investors will be keenly watching out for Powell's commentary for any indication of a slowdown in rate hikes. Asian markets trade mixed as investors await Fed's rate decision. Nikkei drifts lower, but the Kospi trades with modest gains. And SGX Nifty is muted, but hints at a start above that 18,200 mark for the Indian markets. And stocks in focus today are Tech Mahindra, Adani Ports and Eicher Motors. Also on the show, we'll discuss what should one expect from the RBI's off-cycle meeting tomorrow. Now, all of us will be watching out for the Fed meeting later tonight, whether the central bank will be going in for another 75 basis point rate hike or not. But remember, back home, there's a crucial meeting tomorrow as well, and that is the MPC's off-cycle meeting on inflation. Now, RBI has called this meeting under Section 45ZN. What is this section and whether or not we can expect any kind of a rate action from the RBI or not? Well, who better than Lata Venkatesh to put things into perspective for us? Well, good morning, Lata. Thanks a lot for taking out time and joining us this morning. First of all, tell us, what does this Section 45ZN signify and whether or not we could expect any kind of rate action from the RBI tomorrow?
Good morning, Nandita. And I think you began the show very well by saying that what we should worry about is what the US Fed does and says about the December meeting. The RBI meeting is been called under Section ZN of the RBI Act. Now, as it indicates ZN, it's a recently added section. This 45ZN was included in 2016 when the Monetary Policy Committee was created. Until then, the Reserve Bank took all the rate decisions. Now this MPC with 3 external members and 3 RBI members takes all the rate decisions. 45ZN says that the MPC has a mandate to keep inflation within a band which Parliament sets. The current band is between 2 and 6%. If it does not keep it within 2 and 6% for 3 quarters in a row, that 9 months in a row, then what will it have to do is in 45ZN. What will it have to? It will have RBI, not MPC. RBI will have to write a report to government explaining 1, why they failed, 2, what steps are they taking to bring it back within the 2 to 6% band, and 3, approximately by when will they reach target. Now, target is important. Target of inflation is 4% for the MPC, but the tolerance band is 2% plus or minus 4%. So 2 to 6%. So what we will be watching for is what the Reserve Bank in its report says in terms of all this, the reasons why it failed, what actions has it taken, will it take, and by when it expects that 4% mark. The rate action should be removed from our heads. It was an unnecessary speculation because in May the Reserve Bank took, a mid-term rate hike. The market has got this bee in the bonnet, and the other reason why it's worried is that it is coming just one day after the FOMC announces its decision, which is an all-important decision. The second decision of the FOMC is really keenly watched. And if they have kept it on 3rd, are they going to react? Is an unnecessary fear. The announcement was very clear. It is only for writing that report to government. As if all this argument is not enough, I have a source who informed me that no Reserve Bank is not going to discuss rate action. So just let it go to bed. No rate action from the RBI tomorrow. Only this report will be written.
Right, so no rate action. You're right, it's the timing of this meeting that set the alarm bells ringing. But if there is no rate action, this clearly will be a non-event for the market. However, for the long term, what kind of a precedent does this meeting set? Because it's the first of its kind, if I am not wrong.
That's a brilliant question. The word you used is right, precedent. I would assume there is no immediate impact at all unless some people are unnecessarily sitting short on bonds because they're expecting a rate action. Then you may see bonds move up a bit, bond prices. But otherwise, near term, when no press release comes from the Reserve Bank or a one-line release comes saying report has been sent to government, the market should merely treat it as a non-event. But for the longer term, it's a precedent because the Reserve Bank has clearly told us they will not make the report public. The governor told us in the last press conference, when the September 30 press conference, that this is privileged information. We are supposed to write it to the government. Government can do anything with it. It can release it. My own, hope is that the government will release the report because it will put to rest unnecessary speculation. What was written there? Is the RBI going to hereafter hike in a hurry? Is it going to bring inflation to 4% like next year? What is it saying in that report? All those will be very important for the market. Not knowing it will unnecessarily lead to speculation and volatility in the market. And I would think, as you pointed out, it's a good precedent. A precedent of transparency, a precedent of knowing what is in the mind of the MPC. And, for future as well, a communication that is made by the MPC will be made public is a good thing to go. We have the minutes. That was a very good institution that began with the MPC. The minutes of the meeting are disclosed. Now this report also, in my view, should be disclosed and that will set a good precedent.
Right, Lata, according to you, what could the RBI outline in this letter as why it failed?
I think why it failed, you and I can write that letter. We know it's because of COVID. We know that, after that there was the war, and both these events, one after the other, have thrown global supply chains haywire. And look at the developed countries. In the US, the PCE inflation is at 6%, 6.2%, and the overall CPI is at 8 to 10%. Likewise in Europe, their targets are 2%. Look how far they are. By comparison, our target is 4 and we are going at a little over 6, between 6 and 7%. So, this is a global phenomenon created by supply chain disruptions. It's very easy for the RBI to explain that. What will be interesting for me is, by when will you bring it to 4%? We have not seen 4% in quite some time now. I think 30 months before we have touched 4%. Now the fear is that inflation goes up very quickly, but it normally takes a long time to come down. It takes the elevator to go up. It comes down by stairs. And a lot of painful action has to be taken to slow down the economy, which meets with a lot of political resistance. Even in the US, 2 senators have written to Jerome Powell saying, please don't go so fast with your rate hikes. You can't pull the economy into recession. There'll be a lot of resistance. So it's difficult to bring it down. Is the Reserve Bank committed to the 4%? Is it giving you a very clear indication that it will do everything in its power to bring it to 4%? I would want to know that language. I want to know what is the time period they are telling Parliament. It's a sacred institution, the Parliament. And if you are telling them something, you will put all your knowledge to work to give them a time. And then you will be very committed to it because you've promised the highest lawmaking body. So my sense is I would really want to know what is the content of the third part. By when will you bring it down? And how committed the RBI is to get there.
All right, Lata, my last question to you is, there's been a lot of chatter that the RBI may hike interest rates by 35 basis points at its next meeting. And thereafter, it could slow down because the focus has now shifted to growth versus inflation. But does this meeting or does this letter change anything to that narrative?
I think not. My initial suspicion was that the external MPC members would be very ashamed that in their term, they have failed to keep it within 6% for many months, for a better part of their tenure, and almost never reached 4%. And so they will be hawkish. But we didn't get that feeling in the September 30 meeting when the minutes were out. 2 members, external members, were actually very dovish. Jayant Verma actually said he wants to stop at 6%. We are at 590 now. He wants the repo rate to be stopped at 6% because he thinks that the MPC also has a mandate to ensure that growth is protected. Likewise, Ashima Goel did not seem in any hawkish mode when she spoke, but we noted a lot of reasonable worry about inflation from the RBI members, the governor, Michael Patra, and Rajiv Ranjan as well. So my sense is that the December meeting could actually be a split vote, with the RBI wanting 35 basis at least, and, maybe two external members oppose and say either zero rate hike or even, like 10 basis or 25. It's quite possible that we will get a split vote. RBI is genuinely worried that, exactly the thing I told you, inflation takes a long time to come down. It goes up pretty quickly, and they have to worry about, the political implications. Next year is an election year. It's the last year of the NDA government. So there will be political pressure to not make the economy look bad. They will be worried that, they have to bring down. They would rather take the rate hikes now, before we enter the last year of the NDA. So my sense is they will want to front load. The December meeting could be a slightly contentious one.
Well, it'll be interesting to see what the RBI does in its December meeting. And I'm sure I'll get you back on my show to discuss that with me. Thanks a lot for joining us this morning, Lata, and explaining everything to us so patiently.
Thank you for having me.
Now, moving on to the market technicals, we're now joined by Shivangi Sarda of Motilal Oswal Financial Services to talk about the market setup as well as the stocks that will be in focus in today's session. Good morning, Shivangi. Good to have you on the show. The Nifty has managed to defend that 18,000 mark for a second straight session, and we are somewhere around 450 points, odd points away from all-time highs. Do you think this will turn out to be a sweet November for the markets, and we will retest those record highs once again?
Hi, Nalita. Good morning. Thank you for having me on the show. So we've seen that, Nifty rallied from the last 4 sessions, and it has, been able to surpass and hold above 18,000 zones, which was a very psychological barrier acting from the last 2 months. And we've seen good amount of long build-up and buying interest at all support zones, which is quite positive. Even, FIIs have been infusing cash, which is very positive. And the FIIs long-short ratio has also improved. So overall and above, the index looks quite positive, and at these levels we might see some sort of a consolidation or range-bound move, but the overall setup is quite positive, and we could look ahead for 18,350 and 18,500 zones. However, the support which is crucial to watch out for would be 18,000 and 17,900 zones.
Right. Moving on to the stocks that will be in focus today, Tech Mahindra has reported its second quarter earnings, and it has trailed its larger peers. Now, given the fact that IT stocks have been under a fair bit of selling pressure, most analysts believe that they are in the oversold zone. And Tech Mahindra has lost somewhere around 40% over the last 6 months or so. So from here, do you expect the stock to pick up, or do you expect it to remain under pressure?
So, looking at Tech Mahindra and, most of the IT counters, they've been quite in a laggard from quite a few weeks. We've seen that the run-up was visible and there was buying interest. The stock tried to move up, but it could not sustain at higher zones. Similarly, with Tech Mahindra, it did, form higher lows on weekly frame, but then again, it could not surpass its previous week's high. So, somewhere the upside is capped, the momentum might be less as compared to the other sectors. There is a resistance around 1100 zones, so that could be the next level to watch out for, with a support of 1050.
Right. The Adani group of stocks have seen a phenomenal run this year, and Adani Ports has just come out with its numbers yesterday. They were pretty strong. Do you expect the run that we have seen on this counter to continue, and do you expect more upside on this counter as well?
Yes, so Adani has really come out of its range, and it is trading above its 50 exponential moving average on daily frame. Quite positive on weekly frame. It has been making higher highs, higher lows from the last 3 weeks, and we could see that after a support of around 760 zones, it bottomed out, and the stock is performing well. So we could see a good run up over here, because we've seen a good breakout and a good closing on the previous session. So we could look for 875 zones in this stock with a stop of around 825.
Right. Next up on my list is Voltas. The stock was up 4% yesterday, but it has reported sort of an underwhelming set of numbers for the second quarter. A loss of 6 crores versus profit of 100 crores last year. Do you expect weak numbers to put pressure on the counter going forward?
Looking at the chart structure of Voltas, we've seen price volume breakout yesterday. The kind of surge that we saw yesterday was quite positive because from the last 2 weeks it was moving in a very narrow range, and it was not being able to surpass 888 zones. So yesterday we saw a good run up with good volumes. Even the mechanical indicator has turned positive for the stock. So we should expect higher levels. Around 945 over here. Of course, we'll find a little bit of a resistance at 920, but the stock should move above those levels as well, and with a support of around 890.
Right, another stock that will be in focus in today's session is Eicher Motors. It has the Royal Enfield sales have jumped over 85% in October on a YY basis. And the stock has zoomed somewhere around 50% on a YTD basis. Do you expect it to zoom further in the coming days?
Yes, absolutely. Auto stocks have been quite in favor from the last session, and we've seen a breakout in the auto zone. So all of the stocks are moving into the third gear. But apart from Eicher Motor, there is a upside potential over here. But somewhere there was buying interest and then again selling at higher zones. So somewhere the upside can be capped in this stock. In the auto space, in comparison, I would prefer Tata Motors over here, which has a better chart structure and better risk reward at these levels. So, the way it is gradually moving, we can see, buying at every support zone. So how, the support base is shifting higher. And over here, we could see a target of around 438 to 440 levels with a stop of 430.
Right, let's now shift gears and bring on board some viewer queries that we are getting this morning. The first one comes in from Ashok Kandukuri, and he has requested for your view on PNB. How does this counter look on the charts, Shivangi?
So looking at PNB, we've seen that, after a rally of the last 2 weeks, there has been, a selling pressure over here. The stock gave up its gains, whatever it saw in the last 2 weeks. So somewhere the stock is in, pressure, and we could see lower levels of around 39 zones, and some sort of a profit booking would take it, to lower zones. So we could expect little downside over here.
Expect downside on PNB going forward. The next one comes in on Raj Industries. Naveen has written in and he wants your view on this counter.
Looking at Raj Industries, the stock has been moving in quite a narrow range from the last 2 weeks. We've seen, on weekly frame, it is forming lower highs. So somewhere, this resistances are intact and they're shifting lower. So the stock would continue to move in consolidation. We have a crucial support at these levels. So this stock should hold around 400 zones. But of course, it is expected to move in consolidation, no major movement.
Right. The next one comes in from Vignesh Salyan, and he wants your views on Jindal Steel. Now, the stock has been in a steady uptrend over the last 1 month. More upside going forward?
So Jindal Steel looks quite positive, and we've seen that after the breakout, we've seen follow-up buying and hold of these zones at higher zones. And even though there is some sort of a resistance at 470 zones, once it crosses this level, it could touch up to 485 levels. Because weekly the setup is quite good. We've seen from June itself, the stock has been in an uptrend, and any declines have been turned into buying opportunities. So stock is overall quite positive. We could look at a support of around 455.
Moving on to the next query, this has come in on Piramal Enterprises. Suraj Mandal has written in, I beg your pardon, Mayur Chandekar has written in, and he holds Piramal Enterprises at a price of 1,000 rupees. He wants to know whether he should hold on to the counter or look at exiting at the current juncture.
So the stock has been moving quite in a consolidation from the last 2 weeks, but the buying price is quite high. There is a upside potential over here, but it would be capped. We could expect 888 zones around in the stock, so we could look for a exit option at those levels.
Right. The last query for the day comes in once again from the Pharma Pack. Sudha has written in and she wants to know your views on Laurus Labs.
So looking at Laurus Labs, it just took the support of around 444 zones, and it is turning. Has been a negation on the daily frame and weekly frame of lower lows. So somewhere the stock is quite positive. Buying interest can be seen at lower zones. So we could look and the entire pharma space. If we look at all the other stocks like Sun Pharma and the other stocks, they're quite positive. They are having quite a lot of buying interest over here. So we could look for around 490 zones over here with a stop of 460.
I want to squeeze in one last query on ITC. Ravneet Kumar has written in fact, we know that ITC reported a strong set of numbers in the quarter gone by. Do you expect to see levels of 400 on the counter anytime soon?
So, looking at the chart structure, ITC is quite positive. And in fact, we've seen that hold of these levels at higher zones is quite positive. And it is holding its 50 exponential moving average on daily frame from, the June end. So this is quite positive for the stock as, supports are gradually shifting higher. However, we could see a rally up to 360 zones for the time being immediately. And, after that, we could expect more higher of 400 zones.
Right, this wraps up our query segment. So guys, if you have any queries, do send them in to us with the hashtag AskMC and we will have them addressed by our expert on the show. Shivangi, before I let you go, what are the stocks that are you recommending for our viewers this morning?
So my first stock was on Sun Pharma, as we discussed that pharma is quite positive and we've seen a good amount of buying interest in the stock. So my target over here is around 1080 with a stop of 1015. My second pick would be Asian Paints, and we've seen that the stock is bottoming out a very good structure over here. And we've seen that then in the previous series, the stock saw around 97% rollover with a good amount of longs being gradually built into the stock. So we could expect a target of around 3285 in the stock with a stop of 3100. My third pick would be from the auto space. We've seen quite a lot of momentum in all the auto stocks, and Tata Motors risk reward wise is quite favorable. It is gradually shifting from its lower base, which makes it quite a comfortable buy over here at these levels. So with a target of around 438 with a stop of 430.
Well, Tata Motors, Asian Paints and Sun Pharma are some of the topics from Shivangi. With that, thanks a lot for joining in this morning, Shivangi. I look forward to have you on the show soon. With that, it's a wrap on this edition of Morning Trade, but don't go anywhere because coming up next is the markets with Santo and CJ. Stay tuned.